morning, everyone. Happy Tuesday. Welcome to the metal markets. I'm your host, Mark Stalker D. Let me just check how the background music is doing. I do have an RBOB short. I'm going to talk you through it in a second. Let me just see. Alright, so I think we're good. So let me know if music gets too loud. I had to rebuild my entire computer last night. Right. Elvis says we need to put some death metal for the intro. Well, when we were first talking about this before the entire team changed, we were considering getting one of my rock songs for the intro, but then it just became really difficult and I decided to not bother with it. Maybe someday. But yeah, metal markets, I would definitely agree. Although I don't know whether playing some rock music first thing in the morning is the right thing to do. Alright, so let's have a look at what's going on with crude oil and RBOB. So I will be focusing more on the energies markets this week, primarily because copper is in rollover, so is silver. And that means that things are going to get a little bit weird. I am a little bit bullish on copper, but I've just looked at the current contract and it's already pushing the volume into K contract, which is May, I believe. So until that's done, I don't really like trading the rollover. And instead, I am focusing on the newly rolled contracts, which is crude oil and RBOB. Now, typically RBOB for this time of the year can have an upward bias. However, that tends to only become obvious if the crack spread, which is the spread between crude oil and RBOB, widens. So we still don't really have that, and that means that for now RBOB is still being pulled by crude oil rather than the seasonality. So until that changes, I'm going to be using crude oil as a benchmark. At the moment, crude oil is trying to accept the London value area from yesterday. In fact, we've already closed one 30-minute candle inside it, and we're battling around the initial balance low. Since the RBOB product is more volatile, typically you see more extended moves, and it kind of looks like the old crude oil used to look. So it still has a range of about 430 ticks on the day, and compared to crude oil, that's like almost 3 times more. Crude oil is doing a little bit better, but looking at just the average session ranges, they're still rather pathetic. So the only way I get involved with crude oil trading is through options, and that's usually just a few times a year when we hit some of the extremes from the weekly ranges. So on RBOB, I have the 4-hour time frame here, and if I focus on the larger picture, you will see that there is a thinner area of volume right underneath 223.50. We also technically have a little pretty decent demand area from a 4-hour time frame, which is where my current target is. Because of the size of this contract, which is $4.20 per tick, at the moment I'm not looking to scale in or anything. It's just going to be one and done. And the first thing that I noticed is that on crude oil, 67 was tested. They tried to overshoot it on this day when crude oil started going up, but they were ultimately not successful, and there was a hedging event, usually done by the dealers, that brought a very nice sell-off. Since then, we haven't been able to get back to 67, which could be a sign of weakness. I am almost permanently short biased on crude oil and RBOB, which is why I am always more keen to jump into shorts than longs, and I will frequently miss out on the longs on purpose because I know that over the years shorts just tend to work better for that particular market. Right, so this value acceptance is still on the cards in crude oil. What I have here is the developing value. This is volume value. So if I'm looking at where we are at the moment, price is sitting right underneath that. Now, if that starts to change, and if we crawl all the way back above the London value high, I will need to change my bias and quite possibly use that for an early exit in RBOB. But for now, everything's looking fine. I would like to see a little bit more initiation from crude oil to the downside, obviously, since I'm short RBOB. But right now, RBOB is actually looking quite a bit weaker. So they're not twins, they're just highly correlated products. So whilst crude oil does provide a good benchmark, you will always have one being slightly stronger on the day or weaker on the day. And today, the weakness is definitely coming from RBOB. In another 4 minutes or so, we are going to have the London Metal Exchange open, so we can have a look at maybe copper and then also gold. Even though gold is no longer traded on the exchange, on the LME, it still can have a knock-on effect as a result of whatever copper is doing. And that's a recent development. So LME used to trade precious metals, they stopped in 2022. Don't ask me why, I don't know. But at the moment, copper is sitting just above its Globex VWAP. Now we do have a 590 level as a pretty strong level. If we go above that, this whole area from 590 to 6 evens is a chop zone. What is gold doing? So gold tried to go higher, but ultimately was stopped by the average session range high for the COMEX session, which was sitting somewhere around 5260 yesterday, and then it just kind of fell down. We're back under this gamma wall that is still here, so gamma wall at 5200 on gold is still there. Obviously this is a bullish product, so let's have a look at it. And we're having a bit of a random walk here, so nothing much has happened since the start of Shanghai, really. So we had this pre-market Shanghai smash, and then since then it's been very, very quiet. So I'm just gonna adjust these. So at the moment it's a bit of watching paint dry all the way since like 1:30 a.m., which is Shanghai open. So I don't know whether gold is going to be doing anything until the actual COMEX open. Whenever you have a bit of an erratic Shanghai open with nothing else, that doesn't really bode well for the London session, and then they kind of start to kick up again for COMEX. So it might be watching paint dry, but we do have VWAP at 5205. Structurally, this could be an accumulation, just looking at the volumes here. So let's have a look this way. If I kind of zoom into what the buyers are doing versus sellers, every time some buying comes in, that tends to bring a little bit more volume, but overall this is still an accumulation. So it remains to be seen. Let's have a look at higher time frames because they can provide a bit more context. A lot of buying wicks, buying wicks, buying wicks, buying wicks. On a 4-hour daily chart, I think we're ways off from the all-time highs. Let's see what's above this gamma wall. So 5250 is effectively X1. So it's located right at this close and then the open of the two candles. Is that an accident? Probably not. But yeah, 5250 could be a good area to watch for some further hedging. And if you go over that, you can even use that to keep going higher. But it really needs to sustain above it. Now at that point, it would also be above Asia high. So really, if we're going to look for a longer term sort of weekly breakout, because you know we're intraday traders and 1 week is a lifetime away. You would want to see gold above 52.67 quite firmly with no selling wicks, none of the shenanigans. And then we may have a chance to go back to at least the supply, which is at 54.11, and then eventually maybe go into a new all-time high. But you know, we'll see. To the downside, if I'm going to look for some shorts, I would want 5200 to hold. So right now we are sitting just under it, and then if it does start to fall again, that 5125 area has a little zone all the way down to 5100 would be my next area of interest for any further longs. So yeah, it's an interesting chart, this. All right, let's have a look at what copper has done. So we are 1 minute into the LME. Gonna drop down to a 5-minute time frame. But like I said, just beware. You can even see it here, how gappy this is. It's not necessarily the best thing, but we're gonna have a look at it anyway. Rollover is always tricky. I'm taking an anchored VWAP, and I'm going to be anchoring it to the LME open. Globex is very close here, and we'll see how they want to play it. When it comes to Asia high, Asia low, I think that the range is pretty decent. So I'm going to mark that as well, just to have that as a pointer. The correlation between gold and copper is pretty low. It's only 0.3, 0.4 maybe. And that means that gold is not necessarily going to be the benchmark for copper today. We're getting a little bit of initiation here on crude oil, but let's just see what this copper wants to do. As always, I'm marking the Asia high, which I use as a period between Globex open and then all the way up to my 6 a.m. That's when Tokyo ends. I feel that if you're using the entirety of the Shanghai exchange, you will miss out on a lot of the moves. And then this is Asia low. So it's a pretty decent range still, even on this contract where people are fleeing from. Let's have a look at the options levels. Pretty decent level with high-ish open interest around 585. And then we have a rather big space until 575. So if copper starts to roll over, we could see it falling below the Asia low before any significant dealer hedging occurs. If we go below 570, we are going to be going into a negative gamma. So far everything's just positive gamma. And that means some more sort of ebb and flow to the market rather than just straight up or straight down. But yeah, suppose if we lose 585, we have quite a nice profit margin all the way down to 575. So that's something to consider. What is the initial balance doing? Siwa says, can you please describe the things that happen in rollover and how long it lasts? Understand you don't like rollovers. Yeah, so rollover, depending on what you're trading, it can happen monthly or sort of every 3 or 4 months. Metals generally roll a few times a year, even though they're technically monthly contracts, so they're not like quarterly. You know that letter after the product. So for example, on ES, you have ESH. That H demarcates the month that the product is in. And don't ask me how CME assigns those, but every month has an assigned letter that doesn't really seem to follow anything. So during the rollover, what tends to happen, because these are futures, right? They're supposed to look at the futures pricing. You're right, buddy? They're supposed to look at the futures pricing, and there is something called the basis, which is a difference between the spot and the futures. So there are many strategies that take advantage of that particular relationship. Some people only trade the basis, and they want to be either long basis or short basis, and that is also done via a combination of options and outright futures, and also options and spot. So it depends on what they're trying to achieve. Typically that is done by the users and producers of the actual commodity. It is not specific just for the commodities. However, some of the equities markets may see sort of spreads being done, but they're not done for the same reason, because all equity futures are cash settled. That means there's no physical delivery. So it's not like somebody's going to deliver 1,000 ES contracts on your front lawn or anything like that. Whereas in commodities, for the most part, they are done because somebody actually needs the commodity, right? Somebody wants gold. Sorry, I've got hair all over me because I was cuddling Bernard over there, and he's very hairy. So that's what happens when you have 8 dogs. Dog hair is the new black. Yeah, so going back to the rollover, so every time the month that you're trading in comes to expiry, the people who are trading it have to effectively roll or switch into this new contract, and that causes a volume split, and that means everything is a little bit weird. Typically it can last about a week, sometimes it might be faster, but generally it is usually done in about 5 to 7 business days, right? Sometimes longer, but usually by the time that people start jumping out of the old contract into a new one, it's very close to expiry. And at the moment, copper, for example, has basically it's expiring, I think, this week. But I'm already seeing that the volume is rolled into the next contract. Metals are a bit weird because they tend to skip over months, and that is done because of the delivery requirements of the users and producers. So it's not necessarily going to be, oh yeah, copper rolls from March to April. They might roll to May. Sometimes they roll all the way to September or December. Like you will frequently see something like gold rolling from July straight into December. Why? Is because there's Christmas, and there's a lot of producers of and users of gold. So users would be like jewelers, for example, like jewelry stores. So they need a certain amount of gold to be delivered so that they can start working on their end products, right? And they will do so to make sure that they have enough of the goods, enough of the commodity in stock in order for them to satisfy their demand, right? But yeah, it's an intricate mechanism, quite probabilistically annoying, because you get this split volumes and then everything is just weird. You get lack of movement. On some days you might see it just go down because people are jumping out of the old contract. But a lot of the times the rollover is just really odd and just brings very boring days. So you can't even get like a proper range out of it. It's all very tight and it's just very painful. So we all who have been in the industry for a while, I've been trading for nearly 20 years, we just sit it out. It's only a few days, and as a commodities trader, you basically move between wherever there's some movement. You wouldn't necessarily stay with copper because you're a copper trader, when, for example, RBOB is moving better, right? And that's why, you know, when I get questions like, Dee, what's your favorite product to trade? Whatever's moving, right? Whatever's moving. But I will focus only on energies and metals. I'm not suddenly going to go trade soybeans that I don't know anything about. I will still, you know, stick to the products that I know very well. Okay, so far copper is sitting underneath the LME. So this is the anchored VWAP here, this little squiggle. So that spells a bit of weakness. And remember, 85 is the orientation point, KX3. So let's put that on the chart just to watch it. But I'm not trading it. I'm trading energies today. Alright, let's have a look at chat, who's around. EMS says, one thing you can notice almost every time, the majority of short-term small money funds do not play during the last 3 weeks of roll. That's in equities. If you were to not play the last 3 weeks in crude oil, you would then never trade because crude oil rolls every month. But you do get like about 3 weeks of decent price action, and then that final week is a little bit odd. So that's the time to sit out. So if you enter a trade and you're just sitting there doing nothing, just ask yourself, oh, is it the 17th or the 24th for metals? Is it a rollover? And then go to the CME website, just Google CME followed by the symbol that you're trading, and then have a look at the quotes column. So there's a main sort of, I'll show you what that looks like. So let's look at crude oil for this. No, actually let's look at copper because you're going to see the roll. And there's other things that happen, you know, you get things like open interest, you know, it starts to lose open interest, and you know there are other indicators. But yeah, here it is. So this is CME, right? So copper. You will usually land on the overview. What you want is this quote section, and then you want to look at the volume and then the corresponding contract. Right now we're in March, and at the moment it's 15,000. However, we were already rolled to 22,000 for May. So the next contract that we're going to roll into is going to be May. So K, HGK. So how do you find the front month? Whichever volume has the most, the biggest number, that's your front month, okay? So pretty simple way to look at it. Like I said, there are other mechanisms, but you know, this is good enough. Ponda Bearded Juan says, what's interesting with silver right now is there's potentially speculated that there isn't enough physical for the contracts that expire Friday for delivery. Watching what happens here. Yeah, that's been an issue and something that I've talked about before, where the mining operations are actually falling short of the demand. So effectively silver is in deficit. What does that mean for us? I don't know. The contracts that we trade are paper contracts. One of the reasons why silver has gone so crazy is because for many, many years, silver was artificially pegged in a very small range, whilst gold and platinum and all the other things started going crazy. And that's because the paper contracts of COMEX were keeping it low for whatever reason. And then when all of that started breaking down, we saw a huge breakout. And I talked about it here back in like July or something. Right, I'm going to close this because we are now in danger of crude oil failing the auction. We have been battling this initial balance low for a while, and it's just not, like when it tries to fail the auction and goes higher into the developing value, that is now dangerous. So even though, yes, it accepted value, we do have an intraday sort of gamma flip around this area. And it was at 66.25. Let me just double check that. Yeah, so 66.25 was the effectively 0 DT gamma flip. So that means it is a dangerous area. If they had gone below it, maybe some negative gamma could have been seen, but it's not happening, so we have to be objective. This short might still play out, but they may actually go back up to the call wall on RBOB, which is sitting at 225, and then do the same thing. I will stay on the 4-hour time frame just to make sure that I'm seeing that larger time frame picture. But at the moment, for intensive purposes, crude oil is failing the London auction. What's going to happen for NYMEX, I don't know. The only thing that I can tell you is that this is the NYMEX value, this one. And it's fairly sizable. So if we end up below that, that will be a lot more bearish. But then again, we have KEX3 to battle. So I don't know, maybe another failed auction, and then we'll see. But for now, I'm just going to sit and wait to see what happens into this time of day. What can also happen is that at this time of day during the pre-market, that they run to the upside, touch the gamma wall, and then they reverse yet again after 9 a.m. Central, which is after 3 p.m. my time, and sometimes quite close into the Euro close. That happens around 10:30 a.m. Central, which is 4:30 p.m. if you're over in the UK. So value acceptance still there for London, but initial balance is telling us something different. And because they're quite correlated, usually it takes a little while for RBOB to catch up, and then suddenly it just shoots up. So it's a pretty teleporty product because it's generally quite gappy, and this is a normal. Like if you think this is, oh my god, they're in trouble. No, the dome always looks like this on RBOB because it's a product where few speculators are, which is probably why I like it. And whoever's trading RBOB, they usually have to be in it. It's kind of like soybeans and stuff. You don't have too many speculators in those markets. Elvis also says, do you take COT into account in metals trading? No, because I'm an intraday trader. Now I do trade metals intraday quite a lot. I very rarely do options in it, in any metals in it. Very, very rarely do options. I do options for crude oil. Sometimes I will check it, but I'll be honest, there's nothing that I can't already see. Because from my experience, COT is about 2 weeks late. So they will tell. So maybe if you were like a longer term swing trader where you're gonna hold something for 2, 3, 6 months, that could be useful to you. But to me, it's just not useful. I have more immediate ways to find levels of interest and how the price is behaving. I don't need some latent fundamental report of who and what closed contracts 2 weeks ago, right? It's too late for me. Way, way too late. So I never really found a good way to use it. And that is why I don't even look at that. So really not useful. But like I said, if you want to do positional trading, we're kind of halfway between. So maybe, holding your positions for at least 2 months. Yeah, that's something that you might want to look at for sure. Joe Jacob, good morning, Dee. What was the logic behind the entry for RB? Is it a 4-swing high? Partly, but we have this call wall at 225 that I'm using as an orientation point, and I will keep using as an orientation point throughout the day. And as the day develops, we may get some other areas, but I'm basically shooting for the return. So basically counter trend movement before NYMEX. And like I said in the beginning of the stream, there is a seasonal upside that tends to happen on RBOB in particular. However, that can kind of go into May. So it's maybe not for this contract. That's why I was like, let's try short. But crude oil is the one who's for now pulling the strings. And if crude oil is failing the auction, I don't want to keep being short. So I took a few ticks out of it, and now we sit and wait. Trying to nat gas long, and that was just not doing anything. So I just close it immediately. I still want to be long nat gas, so we have 285 as the next area of interest. They are missing it right now, but I don't know whether it was because nat gas is so quick to just ping back on any positive news or negative news, so quick. So I think we had some reports that despite the blizzard, we are going to be heading into warmer temperatures next week, and they immediately decided to sell. It's like, come on. So my idea yesterday was 3 evens or 295. Tried it, didn't work, that's fine, but nothing really changes. You know, if we have a look at the very large picture, we have just gone below this area, but let's go even higher. And there is a massive upside weak structure here. So they could just be wanting to repair this entire structure. We have a little bit of a hole here, like a little cave on the volume. So maybe they want to touch that or the edge of it. This is probably an old level. Let me just clean up some stuff here. This was from the old contract anyway, so we don't need that. But yeah, once we get into 285, perhaps we can look for more longs, but at the moment, you just sit and wait. And because of the blizzard, at some point they should come up. It's just that these macro events, like for example blizzard going through parts of the US, it tends to take 1, 2, or 3 days to actually have an effect, because as the more heating is happening, they might have some problem with storage. We already have a little draw, but maybe everybody's waiting for tomorrow and Thursday to see what the new inventory report says. And if that's a draw, that could be a catalyst for a further upside movement. So just some patience required there. And then wherever we are and whatever the options are on the day, that's what I anchor my hypothesis to. But yeah, for now, I'm not interested in natural gas until much later in the day. Alright, so back to RBOB. I mean, it still looks very bearish. However, the daily chart is still subject to change, obviously, so we don't want to use that. And crude oil is really trying to go outside of the London value. Already failed the auction. You can call it a 3-bar reversal or whatever, but this is, if you're short RBOB, you don't really want to see this. You want to see crude oil driving further. And RBOB usually has a latent reaction, and you require quite a significant move in crude oil in order to wake this one up. And then once it's awake, then it does a move that is 3 times bigger than crude oil. But to me, crude oil intraday is just, it's not worth it anymore. So yeah. And anytime you have a gamma wall, call wall, big call wall, and the price seems to be struggling around it, that tends to be known as something called the gamma pinning. So you have a large area with open interest, and the price is just kind of chopping around it. That is a form of distribution, but you need a resolution, so it can go up or down. And you have to be just seeing what the tape looks like. You know, is there any absorption happening? Do you see large sellers coming in under the gamma wall? Or whether you just see every time somebody tries to sell it, delta immediately pings back and they go higher. That's a sign of strength typically. But yeah, so you can have a lot of these battles in and around gamma walls. That's why the gamma pinning, is frequently seen around them before the price decides where to go. So you can have extended number of hours where the price is just chopping in a range at a gamma wall, and then at some point somebody wins with enough cash flow, and then everything starts to reverse. Do I use the AMD method? I assume you mean Wyckoff, right? I don't know why it's suddenly called AMD. I assume you mean that, but yes, I do like Wyckoff. It's one of the oldest concepts, and it tackles the basic market structure as well. Right, I don't need these today. I'm woken up. It's funny when I have, like, you know, tired eyes and stuff. I do need, like, my readers and stuff, and then as I'm starting to wake up, my eyes almost kind of go. Okay, so the failed auction is in progress now on crude oil, but again, so small, not really worth it. I mean, come on, the initial balance is like 35 ticks wide. It's pathetic. Pathetic. Alright, copper is living it up. It's trying to go away from the LME VWAP, so we are firmly above that. Let's jump to the 30-minute time frame. So the next point of interest would be that 590. I think this is too much risk here because we're not at Asia low. We're not even at initial balance low or initial sort of initial balance high. I think that's, let me have a look at the time. Yeah, that's all the way down here. And I would also like to see kind of a pullback into 50%, but we're not trading copper today. I'm just kind of talking through how I like to approach things. And then if this one doesn't really do much, that's the rollover effect, and that's why I'm staying out of it. But energies are rolled. Energies are all now in April, so that's a fresh, spanking fresh contract, and they should be pretty lively. But yeah, they pull back even in RBOB, so you can see it is still waiting for crude oil to do whatever. And if this takes over and it also fails the auction, I would also need to see it above 225, and then maybe sometime today, if we are sitting in a bit of more of a bullish tape situation, I might go long on RBOB, but we'll see, you know, we'll see. I wanted to grab a few ticks to the downside against the failure of the call wall, but now that crude oil is doing this, 67 becomes an interest, and value area from yesterday's NYMEX is not providing anything. We're just like literally inside it. Some weaker structure in the middle, but I would argue that was already repaired by this move. So yeah, for now, sit and wait for better, bigger levels, and or retests of relevant call walls. Hey, DM and Q flying, couldn't care less, mate. I'm a commodities trader, not equities. I have no desire to get involved in the drama that is MNQ, or NQ for that matter. I still think it's the worst product for most people, and I think the reason why a lot of people are blowing up and or full porting is because you're looking for a quick dopamine fix, and that's harming your skills. So I will die on that hill. I look at ES, DAX, and YM. Really not interested in NQ. So. Not Connor says, be right back, going back to GAC spinning commentary, yeah? And he also says, D, thank you for identifying gamma flips in your charts. I almost missed that part of the options market. Yeah, so I take it from the monthlies, not necessarily 0DTEs. But if you have something that is really lively on the 0DT front, when the time comes, then yeah, you want to know where your intraday gamma flip is as well. But I usually use about a 50 strike span. Sometimes the entire option chain, but usually 50 is enough to show you where the gamma flip is going to be. Rusty Golfer says I quit NQ and GC, ES only. Yeah, I approve. Again, I used to trade ES, I just, I don't know, I always gravitated towards the energies and metals for some reason. Just one of those things. If you like NQ, nothing wrong with that. I just don't. And, you know, we're not the same. Is there anything else that's happening at the moment? Right, so copper is exhibiting that annoying rollover, lack of anything. It's like, we're going up. No, we're not. We're going down. Nope. See that? Non-committal price action, gappy price action. Let's have a look at... Yeah, so even the contract itself, like the dome, this is the full HG contract, is starting to show gaps. That's not normal for copper. So until that rolls, just leave it alone. But you can still practice the same routine, you know, anchoring it to LME VWAP, watching what happens with the options, levels, and how the entire thing is developing. Alright, so crude oil having trouble at VWAP and GEX4. That's fine. So now we're probably just going to be stuck in a range. And again, that value acceptance is still valid. It's just I didn't like the fact that it failed the auction. It's not supposed to do that. So the second part would be that we actually stay here and don't really do much until NYMEX. That can happen. But at the moment, I'm just sitting on the sidelines. See, there are traders that would be like, I need to re-enter. It's like, just hold it. Like, hold up, man. And you know, that kind of chopping in and around the same level, that's what gets people in trouble. So if I exited for whatever reason, that was the right call. And I honestly don't care if I don't really suffer from FOMO. I don't know why people are so like strung out to make every single trade work in their favor, because that's not realistic either, right? You will lose trades and you will sometimes have partials, and that's absolutely fine. But no, people are like, I have to be right. It has to happen today. It doesn't have to happen today. In fact, most times, especially if you have range-bound markets and stuff, you know, what looks like a breakout is not a breakout. Similarly, whoever said NQ is flying, all I'm seeing is that it's reaching the overnight high, and now, like, again, what time frame are you guys focusing your analysis on? And I think it still has some space because we have ES with some bigger levels and the gamma wall up at 68.80. And we're a little bit further away. And since NQ is the most days is a bit more lively than ES, then if ES goes to GEX2 and the gamma wall, that's going to mean a little bit further upside. But then after that, again, expect gamma pinning to occur at least for some time. But no, what I'm seeing here is a classic sweep above Asia high. And now they're trying to reverse. So to me, that is not the definition of flying. So let's have a look at it. Distribution curve. Overnight high, sweep, straight into GEX5 level, which is, it's not a big level, but you know, if it's a range bound market, which it has been, I mean, look at this. It's the daily chart on NQ. And you're doing what? Trying to run momentum trades in a market state where we're not making any headway. Range bound market. So instead of going, NQ's flying, let's just go, yeah, it's gone up, but let's see whether it fails. And for that matter, NQ is always flying. So, you know, it's just whether it's sustaining is the real, real question. If it's not sustaining, then just leave it alone. It's not flying, it's falling with style. Yeah. Did you see copper? Yeah, I'm looking at it all morning. It's in rollover. And at the moment, Topstep X is still on March contract. And it's going to be rolling into May. So until it rolls to HGK, I'm not going to be trading it on Topstep X. Yeah. EMS says, easiest way to clock yourself will go broke. Momentum trader range and vice versa. Try to mean revert to hard breakout. Yeah. I agree. Dr. Dag said he just insulted my breadwinner. I'm not insulting anything, man. I'm just saying what I'm not comfortable with, right? So NQ is like just like the bane of everybody's, of my existence, not everybody's, but you know, whenever we see people's reports, they are losing the plot. Like Dr. Dax, I know that you've been trading for a long time, so you're not one of them, right? I have nothing against, you know, advanced traders who are perfectly able to control themselves. But I do have a problem with relative novices who are trying to emulate what the super stable people are doing. And then they're losing the plot completely. And yet you strip them away from NQ and put them onto something else. They're actually really decent traders. That's why like my soul hurts when I see that. It's like you could be doing so well only if you're not trading NQ. It's like, why do you do this to yourself? And I always say, if you're struggling with it, if you're not seeing the results, if you're not seeing consistency, if you can't hold on to a single account for longer than like 2 days, 3 days, 2 weeks, and you're trading NQ, just consider that NQ could be maybe causing a large part of that, right? And that's, you know, that's just how it is. But for some people, it's amazing, right? You see people like Rips, Nick for a Tick, like they're just not bothered by it. So I don't have a problem with people trading NQ. I just have a problem with me looking at it, because I'm somebody who requires a little bit more time these days. You know, I'm not the youngest, not you know, totally old, but you know, I'm mid-40s. My brain doesn't work as well. And I need calm. When I was young, I was crazy as well, right? I was always gravitating to what then was the highest volatility product, which was crude oil. It was moving like between 400 and 700 ticks, especially like 5-6 years ago, right? But things change, your brains change, and you just find that you can't quite make decisions in the same way. And then I see a lot of novices who are also struggling with that. So I'm like, well, why do you stick with NQ? Oh, because it's so fast. Okay, do you want speed or do you want to actually get a payout? So it's like, that's the question that, if you are struggling with it, that's the question you need to ask. GC and silver falling off a cliff. Yeah, so that is that pin, gamma pin resolution. Let's look at that. Probably some news as well, right? But this is the resolution of a gamma pin. So what did we have? We had 5200. We stuck at or below it for quite a while. See how I was talking about the resolution? Well, that's it. That's what I mean. So you need a strong move, effectively single print or FVG or something that shows you which side is winning. Now, the problem here is that we have Asia low. So that's, you know, something that I would like to also see break if we're going to see another pullback. The correlation between copper and gold is still super low, so it might have an effect, but again, rollover. So yeah, so if you have gamma pinning, so all morning from the start, 5200, move away, come back to it, 52.2, 5200.2, move away from it, come back, touch it, gamma pinning. That's what that is. That's what it looks like. So if you ever wonder, I wonder why this range is here, maybe consider that there's some kind of a gamma wall there, and there's a lot of absorption, there's a lot of fight, people want to long it, but then dealers are going and then they have a lot of cash flow, so they keep absorbing the buyers, and then eventually when the other side runs out of cash, the dealers win, right? And then everything just resolves itself to one side or the other. It can also resolve itself to the upside too, but right now we're seeing that it resolved to the downside. Now, that brings us to another question. Are we going to go back up to 5200 and still remain in a gamma pin situation? Or are we going to go below Asia low, sustain the downside resolution, then the gamma pin downside movement becomes valid for further sell-off? Does that make sense? So it's like a binary decision process. If this happens, then this should happen. If this doesn't happen, then we're back at the gamma pin. If this does happen, where is my next orientation point? Asia low. So we need that to break. Otherwise, this is still just smash down, bounce from Asia low, back to 5200. Don't want to see that. That's how I find my bigger swings. You need these larger orientation points to break, and then you get the proper real momentum. What other pairs do you recommend to trade besides NQ or ES? Ruben, I mean, I will always point people to commodities because I'm a commodities trader. I like them. I quite like RBOB. That is the twinsy, little twin of crude oil. I love teaching people on copper because it is smooth, it's slow, it is allowing you to gather your emotions and thoughts from the floor and into some kind of a cohesive pattern, which we all need. And it's an excellent product to teach skills on. And then once you get better, maybe you can have a look at RBOB or something that's a little bit more complex because you have to watch two charts. You have to watch crude oil and you have to watch the gasoline futures RBOB because they are heavily correlated. So frequently, crude oil might have its own VWAP, and in fact, it happened today, right? So if I go back to RBOB, you'll see what I mean. 30-minute chart, same. Obviously, this one's weaker. Said that already on the stream. But only when crude oil rejected its own VWAP, we saw a further move down, right? Further move down. Before that, it was like, well, are we going down? Are we going down? We're not sure. We're not sure. But I was really looking for crude oil to have a little bit more movement. But it is what it is. It's fine. You know, in real time, there will be certain pieces of data that you can use, and sometimes they will give you a good idea what is about to happen. However, sometimes it will get you out of a trade early. But that doesn't mean that you suddenly lose your shit and go, oh my god, I've missed the down move. How can I get back in? So you can't. This train is gone, right? So now you have two choices. You can lose the plot and start digging a hole, or you can go, all right, so what's the next hypothesis? And for me, that's still the gamma wall at 225, right? So now I grabbed a few ticks to the downside. If we go back to the gamma wall, that is now also becoming the RBOB VWAP. So I'm going to see what happens next time we're back at 225 today, because we're not that far off, right? This is nothing on RBOB. This is like, yeah, barely 100 ticks. It's like barely a third on the day, less than a third. So if crude oil continues with the failed auction, I would really want to see crude oil back at 67. But at the time, I either want to see the highs being tested here, and then maybe doing the same kind of jump off a cliff again. But maybe, just maybe, crude oil does its move, and then RBOB, due to its weakness, is not as responsive to whatever crude oil is doing, so the spread is diverging, and the correlation between the two kind of falls. Maybe we just end up at 225 at the same time when crude oil is hitting 67. And then the same play happens, right? The weakness around 225, which is the call wall and gamma wall and RBOB, maybe the same thing plays out. So then I can play it again based on the gamma pinning idea. So just, calm, talk it through, ask yourself questions, because that kind of tends to streamline our thought processes. But don't just sit there inside your own head and, keep panicking that you've FOMO'd in and out of things, because that's not a good thing. Let's see. I'm just trying to catch up with the chat. TS got a lot of mutants. You're a mutant. Funny you say I'm a mutant, because my old email when I was younger was music mutant. Because I was a session musician. So and when I was young, having like a made-up username that sounded like you're a paladin in a video game or something, that was cool. So when we were young, we all had these hilarious usernames. Baby Genius says, hi, thank you for streaming. First time trading with someone on YouTube, but you're fantastic, appreciated. Yeah, thank you. Thank you for being here. Pleasure to have you. Right, so this bullishness in crude oil is slowly starting to rub off here. So again, even if I stayed in this, I would be staring at a doji at the moment. Back at square one. But yeah, so 225 remains an orientation point. Will we get another trade for the stream? I don't know. Things are a bit weird with the rollover. But at least we grabbed a few on the downside. I'm just trying to scan through anything that might be moving. Gold is having a bit of a yo-yo moment. Boing into Asia and then back up. It's not very comfortable, that. Like, imagine being in this and you saw the big red candle and you're like, oh, I'm going to enter, and then it boings back up on you. It's a horrible, horrible thing to be. And I've noticed ever since gold has started to be traded by everyone's dog and mother, suddenly it started looking a lot more like NQ, and I'm like, ew. You know that audio meme that everybody's using, trying to be cool with the kids? Ew, brother, ew. It's like, that's GC recently. And that's just because of, a whole bunch of speculators who are trading the live markets, but they're uninformed. They're causing additional noise. And I just absolutely despise that. What was it gonna check? Oh, I was gonna change it back to, let's have a look at crude oil dome actually, because just interested if there's any size. So there's some size up at 67, 12, so just above that 62 level. A little bit of size at 67 as well, but I would be more inclined to wait for like an overshoot of the gamma wall. That may be a failure. And to the downside, I mean, nothing really until 65.74. Of course, this is live, so, it could change, because these are all live market participants with resting orders. And at the moment, it's rejecting London value. So if it also goes to reclaim VWAP, we have a very good chance of revisiting 67. But since it's the middle of the middle, we don't want to be in with trades. We just want to try and get involved in and around the extremes of swings rather than in the middle, because that tends to put you in a much better position to survive the movement. And some of the best trades intraday are the ones that tag the previous low or the previous high, and then they go back. That is also why the initial balances that are so well defined, like we have on crude oil, they're excellent pointers. So initial balance is the first hour of any active exchange. So right now, the reference for this particular time of day is London. So that was from my 8 a.m. till 9 a.m. And then later, once NYMEX opens, that's going to be from 9 a.m. Central up to 10 a.m. Central. And if you're over in England, it's between 2 and 3 p.m. So that becomes your new reference, and it works exactly the same way. So it's kind of like your orb on a 1 hour time frame. However, you're not necessarily looking for breakouts and momentums, because those are very few and far between, unless you're returning to value, returning to a distribution curve somewhere. If you're moving away from the distribution curve, I would, even if you're far away from it, I would be more inclined to look for a pullback into that first hour trading range, 50% in, and then maybe a continuation. I call those strength inside initial balance, SEEB, or to the opposite side, if you're looking for a weakness for a sell-off, weeb. Seeb and weeb. So SIIB and WIIB. So it's longs or shorts. And it's a good alternative to like jumping in, FOMOing, and then they wick it above the high and retrace, but then ultimately go nothing. And you're sitting there with a stop loss or 2 or 3, because why? You try to go off an initial bounce break. So anytime you have even an inkling that you may have some range bound conditions, and let's revise. How often, actually, let me ask chat. How often do you think that range bound market conditions happen? Like just looking at percentages. How much percentage do the markets spend? And no Googling. You're not allowed to chat GPT, no Googling. Tell me, how long does a market stay in some sort of a range bound situation? And if you're Googling, you're cheating. Daniel says, taking a break, nothing to see in the markets that looks good to trade, walking away before doing something pushed. Great decision, Daniel. We'll see you later. Deep Pep says, DHD, your strategy is shorting at previous day extremes, white lines, and current day value high. If you will believe it, the white lines are actually invisible support and resistances that are coming from the options chain where the dealers might initiate. So what tends to happen, rather than me putting a line there because there was a high of the day or something, I put a line there, and then usually the dealers create a high or low, Asia high, Asia low. So I use the actual options chain that is a little bit more advanced, but it is also the way that many institutions trade. So they just basically look at the options chain, open interest areas, gamma walls, gamma flips, anything that has high open interest. And I also go one step further where I use the implied volatility per strike, and that I have this calculation that shows me which of those are true anchors, because you're getting like 2 different pieces of data. So it's a little bit more advanced, again, because I've been doing this for 20 years and I'm trying to the one thing that I ran into with the prop, especially because we're working within such tight constraints, and I'll be honest, I did work for prop firms for a long time, but the way the old school prop firms used to run, yeah, you had a data loss limit initially, but eventually they would just give you a chunk and just go, yeah, here's like 40 grand to manage however you wish. And, you know, obviously if you squandered all of it in one day, you would be escorted out of the office never to be seen again. So you don't do that. But you're kind of expected to take your own knowledge and experience and then just decide on what would be the right ways to manage that chunk of cash. And then from there onwards, if you have profits in the next month, you would only get 20% of the overall money, but then they will scale you up like really quickly. So it's like if you had the first profitable month, they will immediately basically get most of that other 80%. I think it would be like 70%. They would take 10% for like company profits or something. But then the rest of it would be put towards your risk for the next month. So therefore it sounds like it's a terrible deal because you're only getting 20% performance fee. But actually because of the high scalability, it made it work really, really well. And you're not going to find that in prop firms online because you would be required to probably trade for like a year or something before they unleash the purse strings. And back in the day, you used to have an actual verified track record via a solicitor, or to give the prop firm the monitoring of the live account that you hold yourself, literally for a year. So live account, no sim. So that's how it used to be, right? In like the more serious prop firms. And then of course you had the more apprenticeship types where you do get in there and they give you a simulated account. You don't need a track record, but typically the money that you get is much, much smaller. That's why, frankly, I was really shocked that Topstep was like giving out 150 grand startup capital to people that nobody knows. And it's like, well, how long have they been in the XFA? And some of them not long. It would be like a month or something. And I'm like, can you feel comfortable giving 150K's worth of money to somebody who really doesn't have much of a track record? So that part, I welcomed it as a trader, as awesome, amazing, but I couldn't really see where that was going, frankly. So from a risk management point of view, I do understand that traders are not happy, but as somebody who has been on both sides of the picture, because I was a risk manager for my own company, that just did not track. Like I used to give out 50K funding, but it was like I needed to have them, have a qualification. Then they needed to show 6 months absolute minimum of live trading. And then if the trading live is not recent, they would need to trade again whilst we're monitoring the performance without meddling, right? Just kind of collating data. And, and here we are, Topstep back in like 2 years ago, they were like, yeah, there you go, have 500,000. It's like, are we sure we want to be doing this? So yeah, I know that a lot of traders are like, oh my God, but I made another 50K in sim and now they're not giving it to me. You don't have a track record, right? And if you think that the track record of 2 months in the XFA is anything to go by, no. Most serious prop firms, they would need you to go through a full year of seasonality, range-bound markets, momentum markets, craziness, lack of movement, lack of everything. Then they would be like, okay, maybe, yeah, let's give them 20, 30 grand, see how they get on. And that's exactly where Topstep is going. So I actually like that. So I know that traders don't agree because you guys want the most money humanly possible, right? But just know that some things need to be earned. And time is the only judge of anyone's performance. So, the gravy train is finally over. I've been warning about this for a couple of years. I was like, this is not normal. This is Twilight Zone. Nobody gives out free money. Like, what's going on? What sort of a parallel universe did I step into? And now we seem to be correcting timelines, right? Some people would be like, no, you're scamming us. It's like, well, if you think so, then give us the, live performance that has been audited by a solicitor. So not you submitting like my FX book or some weird shit, or like TradeZella. That's not an audited verification. You need, like, if you want to go down that route, just go and have a look at what like old school prop firms required. 3 years, some of them, of a track record audited via an independent party. Yeah, 3 years, not 2 months. And yeah, you might get more capital then, but if you can't produce that, you've got no business managing anything more than like maximum 50K, maximum. Then if you prove yourself, absolutely, you get more money. This is a performance business. And I'm shocked at the amount of people on like X who are like, well, you then lose the 80%. Right, so you're so confident in your skills that if they put you into live with 20%, you're guaranteed to lose it. Well, that tells me everything, you know. D going on a rant here again, sorry. But yeah, it kind of tells me everything. So it's like, even you are not comfortable with your skill set. You think that you're going to lose the 80%. It's like, well, why should we give you more money then? I don't, like, it doesn't, math is not mathing there, mate. Yeah. How did I practice back in the old prop days? So I went into prop after I was already in, like I made, God, let's go back. So 2007, I started, had like the same nonsense approach as everybody else. I didn't know what a stop loss was. I was a session musician, didn't come from any sort of finance background. I came from a highly skilled musician and I had a classical background, but I was a rock and pop musician for many, many years. And then I was like, okay, let's see if I can get out of music and find something else to do. And a friend of mine was actually a trader who was doing pretty well. So he said to me, have you thought about trading? And I'm like, well, I thought about it, but I mean, I tried doing like an Intel long or something, and, you know, it went up at first, and, you know, it was up like $4,000 from 400 that I put in, and that I not only didn't take profits because I didn't know that was a thing, it turned around on me and I lost the $4,000 and the 400 initial pitiful amount of money that I put in. So he was like, yeah, so that's not really how you do it. So let me show you. So he cracks open a laptop and he shows me candlestick charts. And I thought that they looked like music sheet, right? Like music notes. So I was like, what is this? I've never seen anything apart from the line chart at that point. And then he started showing me, he said, well, you know, this is, you know, the high, that's your swing extreme, and then you have the low, that's where the institutions plowed in, and you can see that by the biggest strength of the move away. So he goes into this whole like explanation, tells me that I should always use a stop loss, and I was like, what is that? And he goes, well, it's to stop the loss, right? Like literally, the name tells you. And you should only ever use 1% of your capital. Now we were talking swings, we were talking like holding positions between sort of like 2 weeks up to 2 months. And I was like, okay, I will be a good little student. And I started on a demo, pure demo, no combines. They didn't really exist back in 2007, 2008. So I spent probably about 9 months on a demo, just like pure demo, like you would get from like AMP or something. And I started gathering data because, again, he told me how to journal, what to journal, like time of day, size of the stop loss, trying to make the risk per trade very similar in the beginning before you start messing around with positioning, because again, you don't know whether you'll be successful in the same setups that he takes. And I started seeing some success. So I was like, I think I can do this. So I went live with just £2,000 because I'm in the UK. And for the first 2 years, from 2007 to 2009, I did really well. I made 70K, nothing like, oh yeah, so millions. I'm somebody who's very risk-minded in general. And I don't use large position sizes. He told me not to, so I wasn't going to start doing stupid things. But after 2 years of constant profitability and me making such a high return on investment, right? I was like, I can do no wrong. I just, you know, I'm God's gift to trading or whatever. So anyways, I got biased on a GBP Aussie trade because I was trading Forex back then. I was convinced that it's going to keep going up. Convinced. It didn't. And I kept widening the stop. Then that got smacked. Then I entered again and again and again. Eventually removed the stop and basically plowed all the 70K into the ground. In like a week, 2 years down the drain. So obviously that was like a big wake-up call. I'm like, what happened there? And I was like, I can't believe how much control I lost. Like, what? There's something really odd happening. So I went on a learning journey to find out how our brains work, how it works under pressure, why things happen in trading. Is if somebody, like a lion is chasing you and you're actually feeling as if you're going through some kind of a death situation, death threats, when it's just some numbers and money on the screen. There's no actual death threat. So that's how I know a lot about neuroscience, because that's when my journey started. After that, I managed to pick myself up off the floor, start again, and then this time I went from 2K to 60K much quicker. So that was like maybe 6-7 months. And then I invested more money, so I invested another 60K and very quickly ran that up to like $250,000 in another sort of 6 months or so. But it was an additional investment, right? So after that, I felt like I wanted to do that for a living, and it just made no sense for me to be a musician anymore because I was making a lot more as a trader. So I thought to myself, well, let me have a look at some intraday price action. Around about that time, this was 2012, we also started to see some after effects of the European austerity measures in Forex. So things started drying up, and I started thinking, oh, maybe I just need to get better at intraday. Tried it for a year, failed miserably, didn't know where to start, but I could see that the 30-minute time frame was doing something. I just didn't know what. So I thought to myself, well, instead of me kind of banging my head by myself, why don't I go somewhere where I could actually learn from people who had done this before? So I went to Chicago, the prop hub of trading, stayed there for a few months, found an apprenticeship. They taught me about volume profile initially, and from there on, I just started learning, right? And that learning never stops. You always have to keep learning because it's never, it's never just like, oh yeah, the linear process. Now you're here, you will never be wrong. No, you will have Muppet moments, right? It's just that eventually you will start to realize that some of the old patterns maybe might be rising up. You've dealt with them before. You can kind of get ahead of them quicker. So for me, I was a month in the prop firm. They gave us a month on the sim. However, the funny thing is, in the first week, I, excuse my French, effed it up like royally again. So I hit the DLL like on like day 2, and they went, "You okay? You're right." So got the risk manager's shoulder tap, walked me to his office, all of that. You feel like you're going into the principal's office. And they were like, well, what's going on? And I was like, oh my God, I don't know. I've got emotions again. Like, why? What's happening? And he said, okay, you want to go back to the sim for a while? So I went back to the sim for 2 weeks. Then I gathered my emotions off the floor and started going to the gym. So my routine for a very long time was bodybuilding in the morning and then trading. So no trading without getting rid of the glycogen reserves, because that's that's the fuel for fight or flight. So if you don't deal with that, you will always struggle. These days, unfortunately, I can't do my former favorite hobby because I have a chronic illness. But I still try to get some fresh air. I still try to do something, just anything that my body allows me to. Would it be better if I could do bodybuilding? Yeah. But at this point, even though I have an odd day where I kind of lose the plot, I can generally stop. I mean, you can see that in the report of this experiment I've been doing too. So the day where I went seeing whether silver is going to do something, and then I was like, oh God, I'm so annoyed at it. I also wasn't feeling that well, and that I literally took it out, but I always have like a minus 1.5k stopping point. Obviously slipped me a little bit, but it was like, all right, done. Yesterday was my just 2 trades in that gas that didn't work, but also I had to rebuild my entire computer, which was ultra annoying. But it's hopefully back and running now. Cleaned it up. But yeah, this was a more controlled loss day, right? So I did 2 trades, 1 scale in. And then this is also showing me the stress test of how things work on the day when I'm not reading the market right. So that's basically what I'm looking at. Apart from that, it's like I'm pretty happy with the rest of the numbers, and I'm liking the fact that my scaling in points based on MFE, which I'm still uncomfortable about, it's mathematically sound, right? So even if I lose the plot on one day, it's still not enough to cause a significant dent anyway. But the whole point that I was trying to make is that you never stop to learn, right? You're always changing things. And with the prop firm rules being strict, it is even more important to find a robust way that you can scale things while keeping the downside pretty in check. And the only way that I could see how to do that after crunching loads and loads of data is to start with the multiples of micros and then scale in no more than like the absolute maximum double of the initial position. Absolute maximum. But the whole scaling in has to happen in a fairly tight MFE condition parameters so that it doesn't run away from you too much. Therefore, by the time that you're in with double the amount, you're screwing up the average completely, right? So that's one problem. The other problem is that do you take into the account the MA, so the maximum adverse excursion on swings? So it's like once you're in with that many contracts, so let's say let's take copper, start with 4 and scale up to 8. Now on nat gas, I have a different thing, so I start with 5, scale up to 9. So again, it's never double, it's like almost double but not quite, with the majority of the position being at that basic trigger point. So what is the MAE? So once you're triggered into all of these extras, how much MAE does this have? So is it going to come back at you and actually smack you in the face with all 8 or 9 contracts? So that's something that I've been trying to solve, because I was not very happy with the style that I was doing things, which is more designed for bigger accounts and comparatively smaller sizes percentage-wise. Then it's survivable and your risk of ruin is very, very low. But I wanted to find the risk of ruin to be no more than about 7 to 10% blow up when we look at the 6-month period. So not 1 day, 1 week or 1 month, but a full like 6 months of trading. Also assuming that I'm not going to maintain 60% accuracy at all times, because you might have, 56, 50, 43%. Over the 20 years that I've traded, I have a 43% accuracy. So I definitely need the 2R multiples as a default to make the math work. So all of that was just kicking in my head, and I'm like, all right, so let's try and find exact scale-in points. And this is something that I've never done with online prop firms, right? Since the online prop firms blew up, I kept trading them like I traded them before. 3 minis, enter one, enter another one, and then enter a third one, the end. It was too much risk of ruin, too much variance in the P&L, up and down, as my Australian friend says, like the horse drawers. But yeah, it's now more than obvious to me where my new pain points are, right? So the 3rd and 4th scaling, I'm so uncomfortable. It's still uncomfortable. I'm like, oh my god. Yeah, so I layer Mr. Long Shorts. I also layer the stops. So if I'm going to trail a stop, I'm not going to trail the entire stop. I'm going to trail a partial of maybe 1 scale in. So I'm in with 5 and I entered another one. I may do it, break even on the new scaling point with a new slightly changed average. So I do like that, and I've been trying to see how that would work. Now, unfortunately, in some of my products, trading stops just doesn't work because they wag up and down in like the 30-minute period by 75 ticks. And you see, when I was doing this, I was exploring whether trailing stops on RBOB would be a good idea. And I came up with a number that unless your trade is actually over 75 ticks in profit, more closer to 100, that you will be whipped out a lot of the times. So therefore, you might survive like 10% of the trades, and yet you're giving up like 90% of the trades that ultimately do go to our target. So to me, that's unacceptable, right? So I don't want to be losing out on break even after putting my mental capital into a trade. So therefore, I don't trail stops on nat gas, I don't trail stops on RBOB, but I might trail a stop on copper because copper has a little bit more stability in the price action, the way it moves. So that's what I've been working on. This is the whole reason why I'm in a combine, and just basically trying to make everything more stable. As you guys know, I've been live twice. The second time around, I really struggled throughout the summertime, and I kept trading with size. So I'm like, well, this is just nonsense. I need to try and find a different way to minimize risk of ruin increase survivability. And just as I was working on that, Topstep comes up with new rules, and I'm like, well, now it's even more important that I do this, right? Because we need to make sure that the first week or two in the future live account do not go past the 30% drawdown. So that now becomes a different problem. So not only do you have the initial balance or that you get into the account, but now you have this additional drawdown that you cannot touch. So what would be the safe amount? What would be the safe scaling points? Keeping in mind the proper risk rules on the milestones and unlocking the rest of the capital. So all of that is something I've been working on, and obviously we're all going through these changes together. So this is something that's working for me. So starting with a multiple of micros, adding no more than double that, and paying attention to the MFE and MAE of the actual product itself. Like how many ticks does it move when it goes into momentum? How much does it pull back? You can use AI for this purpose. You don't have to be some maths whiz, luckily, these days. And then just see whether you can make an actual solid workable system that will have maximum 10% risk of ruin when trading it that way for 6 months. Because I go for longevity. I really couldn't care less making 40 grand in one day, because that's unsustainable unless I have, $1 million account. Unsustainable. Okay? Anything less than that is like, you're just playing with fire there, mate. That's my thoughts. Anyways, that's all I have for you today. I'm going to finish up the stream. At least we grabbed a few ticks here. Let's see how this gamma pinning happens. They seem to be coming back to the gamma pin at 225 on RBOB. They might actually look at the structure because we do have some highs here, so they might want to go up there. The new MGI is going to come from the NYMEX initial balance. So at this point, I usually go and walk my dogs. So I will be doing that in half an hour. And then coming back after 9 a.m. Central, and then into the Euro close for my next trade. So I do not trade the initial balance for NYMEX. It's the worst part of the day for me personally. And when we are inside the value area, like we are on crude oil, so this is the previous value, previous distribution curve, we're sitting dead in the middle. That amplifies the suckiness that I experienced during the initial balance. So I'm going to wait until all of that is like out of the way, and then I will see if there is something here much later in the day. So that's the next 90 minutes of 9 a.m. Central, and then all the way up to the Euro close. And then if I've got nothing there, I then go to what I call the day range fill. That's after 12 p.m. Central and all the way to NYMEX close. So I work in zones, time zones. That's all I have for you today. Thank you so much for joining me. Join me again tomorrow for another episode of the Meta Markets. I'm Marcus Tokati. This is Topstep TV. Enjoy the daytime show, and I will see you later. Take care.